Let's bring it back to tech. Let's talk about the market at all-time highs with Alan Nuckman. Back with us, Chief Market Strategist at BullseyeOption.com. Morning, Alan.
That sounds great. That's a great lead-in.
Yeah.
Market all-time highs with Alan Nuckman.
Broke it out.
That could be a show.
It
Don't
is.
you think? You know, it's been my show. It's been a broken record from my standpoint, and I still see a lot more upside left. You know, we've finally broken out, and, you know, we're at the highs, but my technical targets kind of across the board are another 25% higher, and we'll get into that. But
let's start there. 25%?
Yeah, well, S&P 6,000. S&P 6,000. Remember we had a conversation before? You thought I was talking about an ETF.
Right, when you were talking 5,000.
No, we're 5,000 is a done deal, okay? Why are we even talking about that?
Hold on, we're 130 points still off.
Okay, so anyways, technically there's a lot of positives. Yeah, we're finally got a breakout. We had a bit of a pause here for a month. We traded sideways, and as we've seen, every time we trade sideways, that builds the energy for the next move higher, and that's where we stand. There's still, you know, a ton of positives. We're in the middle of earnings season here, but if you look at that V recovery, the full V recovery that we had in the S&P.
From November? November to remember?
The whole V recovery.
Oh, from the COVID low?
Yeah.
Okay.
Well, I mean, from the...
Post-COVID low?
So when it went down to
a lot of V's the last couple of years.
3,800. So you take that distance, add it to that old top at 4,800. That targets S&P 6,000.
Got it. Okay.
So
from the bear market low, that's your...
Yeah, that October of 22.
Okay.
So that's what I'm looking at. So
you like to trade stuff that's been lagging. I'm surprised you're not coming full bore with like Russell 2000 trades and IWM calls and stuff.
For me, it's about risk reward. So it's about risk reward and probability. So I mean, yeah, I would like to be aggressive sometimes, and now is the time to be a little bit more aggressive. Now that we've confirmed this with this breakout, you know, we're waiting for a little bit of a pullback, a little bit of a pause in the marketplace. And that's kind of what happened and got people going. But, you know, we're also trading sideways in the 10-year note yield between 4.25 and 3.75. Right. So a breakout to the downside on that targets 3.25. So
wow.
If you look at rates, yeah, they're not coming in fast and furious, but they're still looking for a 4% rate by the end of the year in the 10-year note yield, according to the markets.
So if we go back down below...
I mean, sorry, not the 10-year note yield, in the Fed.
Right. If we go back down below that low for the 10-year, you're saying that we could go down to the low threes possibly.
Yeah. Technically, that's what the markets, you know, are saying. I'm not smart enough to figure that out, but I'm just going to follow what the markets do, and the markets have been right. And again, I think, you know, the first pause that we saw in the first few weeks of January, I think people were just celebrating, you know, the chairman being the man of the year.
Yeah.
I mean, how could he not be the man of the year?
Yeah.
I mean, this is exactly the way you would play it out if you wanted to, you know, drive the economy.
Sure. When you look at the connection between stocks and bonds, you're a lines on charts guy mostly. Do you think about why we're here? Does it matter? No. Like bonds versus like NVIDIA, what's driving it? Is it just we broke out, we're going to go further?
Yeah, I just trade what I see. I try not to think too much, and you know, it's been successful for me. So you know, I don't want to fight it. This Juniper trade that we're going to talk about right now,
we got Juniper and Palantir.
Palantir, sorry.
There's a P in there somewhere.
Yeah, Palantir. You know, we did this back in August before the market broke out, and it rallied, and the option almost gained 100%, and you know, we achieved our goals there. So it's reset itself. So right now, like you said, it's more of a challenge to find stocks that haven't participated or have had a pullback, and that's if you look at this particular stock. It's 20% off its off its November high.
Yeah.
So it's had a bit of a pullback. But let's talk about the market in general before we get there. If you look at technology, the NDX has full V recovery, 16,000 down to 11,000, 21,000, 25% higher. You talked about the S&P 6,000, that's 25% higher. If you look at the VIX, just to get down to 10, we're at 13.5, 25% lower. So there's a lot of these things that are setting themselves up. From my standpoint, that are very, very positive.
You think with all-time highs in stocks, VIX should be lower because we're not at the all-time lows of the past year or the year-long lows?
Well, I think the VIX will grind lower, and that'll be a confirmation for it. But one more thing I want to throw out here is also PE. PE is at 19. The highs were at 22 and change and stuff. So
still below COVID highs.
So we're still 20% away from the highs in the PE. So there's still a lot of room to run in everything that I look at.
I like that point. Valuations have been more subdued, as we've talked about. Not everything has been blasting off in like crazy fashion compared to COVID. You know, you got stock like Tesla's still trending lower. And a Palantir too, which is still off its highs. And I know you're not a big fundamental guy, but lately the market's been kind of worried that maybe their government contracts aren't hitting as much. But I guess that changed today because it's up 8.5%.
Contracts in what?
Well, they do counterterrorism stuff.
Oh, I don't know. I trade what I see. I trade what I see, and let me tell you what I see. Now, I use Apple as my barometer, obviously. Yeah. Apple had pulled back, came to the 180 level, but traded between 180 and 200. So a breakout of that target is 220, which is 25% higher. 25%, that's the number of the day. It's like Sesame Street.
For Apple.
Yeah, for Apple.
Okay,
and
I love it. You're giving us all kinds of stuff.
Bank of America also said their target was 25% higher. So, there's a lot there. So looking at tech, as far as this stock goes, it's been between 14 and 20 for 6 months. A breakout of the range target's 26. 17 is the midpoint. We've held that. That's also the 200-day moving average. Like I said, it's 20% off its November highs. So it's pulled back. It's paused, giving us another chance. And it's 200% off the lows from last January at this time.
Yeah, it's been going berserk off the lows. It's a pretty volatile stock from 45 in 2021 down to $5. Now we're in the low, sub 20-ish.
And that's why I trade options. I sleep well.
So you're buying in the money calls?
In the money call.
What strike? What are you using?
Well, what do you think? What's the low? 14 to 20. So I'm looking at a 14 call for June. Okay. It's got 5 months of time. It's got an 80 delta. It's trading for about $5. It's $4 in the money. So it's got plenty of time to perform. And looking at this stock. This stock was at 45 in 2021.
That's what I'm saying, yeah.
For whatever reason, the last couple of times I've been on the show, and I don't know why, but for the last couple of reasons, a lot of these software technology stocks, I just look at the sector, have come on my hot list.
Yeah.
They've all made the same kind of bottom base. They popped up. Everybody got, enthusiastic. And hopefully they use that to take profits. And then it pulled back a little bit. And then now this has given us a second chance because they have a lot more upside, if you look at how far they are from, reasonable levels.
So depending on when you put the trade on, you're probably up pretty good right now because it's up 8%. I mean,
no, the market opened up higher. It opened up $1 and some higher. It popped right.
Okay, so you just put this on today.
Yeah, so it popped right at the open. Yeah.
Got it. All right. So you're looking for this thing to get to a fresh 52-week high before you think about touching it?
Well, I always have my plan in place: 50% and 100%. So 50% on a $5 option, we got to move another couple of dollars. So that's the power of using in the money options. It acts like a stock. Again, my maximum risk is the $500, whatever it is. But if it gets up to $750 on that option, $750 plus 14, you do the math on that, you can figure out where it has to be to get that 50%. And then usually, the wise thing to do would be move your stop loss to break even and then play the second half for 100%. So no matter what you trade, it's how you trade. It's money management is more important than anything else. So let's talk about that. Maybe in a whole show, the bullish market with Alan Uckman and money management.
All right, just be careful on victory laps before we actually get to 5,000.
The first victory lap we're going to say is the all-time highs. Okay,
sure.
Can you at least give me that?
Correct.
Get Ben in here to give me that too as well.
I think he has. 6,000 next stop once we get to 5. All right, thanks.
Well, I don't know when, but that's the technical target. Yeah.
All right. And VIX back down towards the lows.
10.
Okay.
That's not even the low.
Appreciate it, Mr. Duckman.
Thank you.
Thank you, sir. All right. Nice Monday energy for us as always. Alan Nuttman, Chief Market Strategist at BullseyeOption.com. Coming up, let's talk some more tech. A couple favorites from our next guest in the Mag 7 and then a couple consumer stocks in the mix as well. We'll keep picking companies. Amazon, despite a huge run on the year, is still below its all-time high.